Most of the things that we're gonna be talking about will be in most importantly, the plan. Have a plan, then execute, like you say that I've put here. Plan, execute, and the only thing that will come out is the outcome. That's the only thing. You can only have one of two outcomes. You either win or you lose the trade, right? So I think you saw this trade over here, right? Of Mr. Cool, the trade of Mr. Cool over here, right? So this was his trade on Bitcoin. The one he took on Bitcoin. Actually, not this one actually. Yeah. This was a trade he took on Bitcoin. So as you can see, price made a low, made a lower high, started making a higher low, but it made a lower high again and broke below this level, right? So this was the indication. Price went up and price was making higher lows and higher highs. Price made a shift in market structure below this level, went up to create a lower high. So hence the entry. So this was the entry model. Nice clean 1:3 to the downside. So and I did say one of the things that I did say was this, right? It was like you could have easily got a 1:9 trade out of this trade. And I did say no, you didn't know that part. And discipline comes with having trading plan in place. So if you aim for 1:3, then that's what you aim for. Whatever price does after that, that's up to the market. So that's the thing that comes with having to, have that discipline when it comes to trading. I mean, you can look at the analysis and say, oh, I could have easily taken, from this trade, I could have easily taken a 1:2 on this trade. I didn't know price would go that far. You get what I'm saying? I didn't know price would go that far. I was only aiming for what I was only aiming for. You get what I'm saying? So just those are just some of the things that you should be able to, work on, because those are things that actually would affect your trading as a whole. You get what I'm saying? So remember, we do have we're gonna be having different styles when it comes to trading. We're gonna be talking about different styles when it comes to trading. Like for instance, we're gonna have the swings trading. We're gonna have the day trading part also, right? And then we're gonna have the scalping parts. You get what I'm saying? So your risk to reward in these can differ. You get me? Your risk to reward can differ all in all of these. You get me? So it's not necessarily for anybody to tell you like, oh, this is this, this is that. You get what I'm saying? So your risk to reward in all of these can differ. How do I mean your risk to reward can differ, right? So you can capture a 1:3 on a swing trade, right? You can capture a 1:3 on a swing trade. You can still capture 1:3 on a trade on a day trading. You can still capture a 1:3 on a scalping, depending on the type of trading you would prefer. So that's what I want us to, in these coming few weeks, I want us to focus on that. So you can be able to find your urge, find what you're good at. You can understand what works best for you, whether you're gonna go with the scalping part or whether you're gonna go with all right. So whether you're gonna go with the scalping part or whether you're gonna go with the whether you're gonna go with the what is this or the OGICC. For instance, we had this happen on the 4 hour. The 4 hour was broken. The high lows on the 4 hour was taken. Now the price giving indication went up to correct. You understand? So anything from here would have been ideal to take to the downside. I mean, price already had made a shift in market structure on the 1 hour, right? Price already made a shift in market structure on the 1 hour. Higher low got taken out, price made a lower low, and then went up to go give a lower high. And then because the only high that mattered was this high over here, right? So with that being said, this was a lower high compared to this, right? That's where the indication came from the upside, right? So if you prefer the OGICC way, anything from here below, anything from here, stop loss just about the lower highs, and then you aiming for your 1:2. You know, this would be a 1:2 type of trade, right? So this probably would be you in terms of OGICC. So you would have been in the trade from yesterday and even still now. From yesterday after just the market opened and even now, or even not even from yesterday, from Wednesday, because price broke below that level, right? Price broke below the level, so you would have been looking to take price to the downside up below that level. Obviously, not obviously after price has obviously broken below, probably would have taken price. Anything below that would have been what you were gunning for. So price as it came up and did this thing and whatever the case may be, you would have been looking to take price to the downside on a 1:2. That's still fine. This is swing trading. You're still getting the outcome that you want, and you would still be in profit. You would still be holding the trade even now on a 1:2. This is based off a bigger time frame, but you can be able to execute based off how price reacts on those levels. So the win rate on this thing is gonna still be the same. You get what I'm saying? You're gonna have obviously the same win rate that you're gonna have over here. Everything from understanding market structure will give you at least a good 80% win rate, 70 to 80% win rate. You get what I'm saying? So those are kind of the things that you're gonna be looking for. You get what I'm saying? So this is gonna be the OG ICC that you're gonna be tapping into. That's the swing trading, right? Right now, with that being said, now we can focus on also on the 1 hour, right? Now on the 1 hour, as you can see, price is going to the upside, right? So remember we talked about remember we talked about the swing trading, right? So with that being said, we can then talk about the day trading, right? So now you're gonna focus on the 1 hour, right? So with on the 1 hour, as you can see, already you know on the 4 hour where you are, what price was doing on the 4 hour, right? So price made a shift in market structure from these levels, right? Price made a shift in market structure from these levels, and price gave an indication below that, or went out to correct and sold below that level, right? Okay, that one you know for sure. All right. So with that being said, you can then use the 1 hour for day trading. You can like, okay, 50, let's go to 15 minutes. Let's see what price does. Price went up to correct, came back, broke below this level, and you can look to sell obviously if price makes a market structure shift, which happened from here, or you could have taken this one. It's still structure, but most of you have realized that you don't consider this as structure, which it still is, but because of you like, oh, that's the only one candle, doesn't necessarily mean it's not valid, you know. So price, but let me just walk around with this one, right? Price broke below, gave an indication, went up to correct. Price made a lower high, and anything below that price would have been fair game. Also, looking to take price, to the downside. Still, you can use the same method of OGICC. Anything below that breaks below, you could be looking to sell to the downside. Stop loss just above, and then there would be your 1:1, probably your 1:1 if you were aiming for this level. This would be your day trading. So this trade would have just took you just about 2 hours, 15 minutes to be exact. You get what I'm saying? So this was still OGICC in terms of how price was looking. You get what I'm saying? And how price have been reacting to the certain levels of the 4 hour. You get what I'm saying? So that was the day trading part of things. If this gonna what will be working best for you also, you can go with that same style of entry with the 1 hour, same thing. You get what I'm saying? So that's how you, if that's how you prefer it, then that's would have been the case. Also, if that's how you prefer it, if the entry model with a lower low and a lower high on the 15 being made, right? That would have been the entry would have been somewhat like this, right? So obviously your TP would have also still been 1:1. You know what I'm saying? So pretty much more or less the same thing, right? And then we have the scalping part of things. That's where things start to get more interesting, right? You had the one level got breaking out, and then price went up to correct on the 15. You have this 15-minute indication. Price went up to correct, right? But then what the 15-minute price as it gave an indication and went up to correct, and anything you look to take anything to the downside. Like you would have marked one of the levels that stood out for you, which would have been this higher low, which could have stood out for you, especially on the 5 minute. That I'm saying. So going to the five, this is how the chart looks at that very same level. So as you can see, price was kind of consolidating, giving its own thing there. You know, you see price broke below this level, went up to correct price. Anything with a lower low and a lower high below this level where you saw price giving indication on the 5 minute and price giving indication on the 15 minute, right? And we had this shifting market structure which happened on the 15, right? So anything below from this level on the 5 where price was correcting price from this 15-minute level here, right? So was it that one? Yeah, I think that's the one. What is it? Let me see. And that was the 1 hour one. Yeah, that was the 1 hour. That was the 15-minute correction. Yeah, the 15-minute correction, indication, correction. Yeah. So you have that being done. So on the 5 minute, obviously below this price, anything with, where you would have maybe like, okay, where's price was going to, obviously, even if you could have went to the side where like, okay, where price would have went up, correct, but also one of the things where price kind of went up also after giving another, indication. Most of the level that you would have looked for, right, would have been on those areas where you were like, okay, I need a shift in market structure or some sort of thing to happen. Price giving indication below here, start giving lower highs. As you can see, price started giving lower highs from these levels to the downside. So anything below that level with a lower low and a lower high, you can be able to execute on a smaller time frame. So you had this price make this lower low after breaking this higher low, lower high, and then there you have your entry. Your entry would have just been here, stop loss just above the lower highs, and then as you can see, this trade would have possibly been a 1 is to 2 more than it would have been a 1 is to 3. So it ended up being a 1 is to 2, right? So even here, when price broke below that 15-minute level, you could have probably went to the 1 hour, looked for some trading opportunities even before the market made all of these moves, right? So as you can see, price when it got to that level, anything below with a lower low and a lower high would have been solid for you, right? So as you can see, price broke below, made a lower low and a lower high below that area. You could have been, that's where the 15-minute indication gave the indication, the 15-minute gave the indication, and you also have that 4 hour indication where price broke a higher low, right? So with that being said, you have price giving you a lower low and a lower high below this, level, this 15-minute indication. You're like, okay, I can look to take a 1 is to 3, a good 1 is to 3, stop loss just above a 1 is to 3. There you have your 1 is to 3 on the 15 minute. So more or less it's still the same outcome. So I want us to be able to have if need be, whatever works for you. There is not necessarily for us to be having like different trading, styles, but whatever works best with your schedule, whatever works best with your trading style, in terms of what you actually like to do. You get what I'm saying? So if you prefer it that way, you can then start doing it that way. You get what I'm saying? So that it doesn't really affect you in very much so. So those are just some of the things that you're gonna be focusing on also in terms of understanding stars. So you see, even here stars have three solid, lower low, lower high, under five, and then if you were going for 1 is to 2, this would have been the trade. If you were going for 1 is to 3, this would have been the trade. If you were going for 1 is to 1, also in the time frame, that would have been the trade to the downside, as I showed you earlier on the 1 hour. So like I said, most of the things that you're gonna be doing, you're gonna choose from these three which one works best with your trading style. So whether you're gonna go with swing trading, and obviously your risk to reward should be also something that is like I said, one of the your your risk to reward ratios, right? Your maximum should be 1 is to 3. If you leave a run still 5, this would be a maximum. You should be able to do 1 is to 2 RRR or 1 is to 1 also, right? Or a 1 is to 1 RRR. You can choose from these, right? You can choose from these which one. This here, the 1 is to 3 should be at least the maximum you're going for. But if you leave a runner after that, it's still fine. Because the reason being, if you can be able to master the courage to, you know, do all of these here, things will get much easier for you. If you're scalping, if you're going for 1 is to 1 or 1 is to 3 on scalping, chances of 1 is to 3 ending up happening on a scalping are very high. On day trading, chances of 1 is to 3 also, it's a 50-80% chance. Also on a swing trading on a 1 is to 3 is more of a 50-50%. You get what I'm saying? It's more of a 50-50 because where you're gonna be entering and where you're gonna be holding, it will be on the basis of a 1 hour. So a lot can happen within 2 3 days of the market, and there's gonna be news event, there's gonna be all of those things. You get what I'm saying? But if this price is bound to go that side, it will eventually go that direction. You get what I'm saying? So those are just some of the things that we're gonna be, focusing on. So like I did mention something on a one-on-one yesterday, like I'm gonna also be showing you how you can be able to execute the 1:1, right? So most of the best part is one thing that we always talk about is price correlation, right? One of the things that we always talk about is price correlation, or you can say time frame correlation. Time frames correlation. So basically, if the time frame they correlate, it is much easier for you to get these things from either of these, especially the scalping part and the day trading. It is much easier for you to get either of these that are happening over here, right? So back to the analysis on the 4 hour on gold. Let's start there. All right, so like I said, we had this level that got taken out, the high lows, which got taken out on the 4 hour level, right? This 4 hour level, the high lows that got taken out, see, the high lows that got taken out, see, price made a lower low and then end up going to make a lower high, and then price is going to the downside. So as you can see, we see a high low that was made on the 4 hour, but on the 1 hour, price was already making lower lows, right? So we had this also lower low, this last lower low to get taken out. As you can see, we are now bearish on both the 4 hour and the 1 hour, right? So you can see price giving indications to the downside. So we know that overall we are bearish, but the daily is the only one that is currently bullish, right? So we have the indication below this 1 hour level that is currently here, right? We have that indication below that level. So probably pretty much the 15 and the 1 hour would most likely look the same. So we had this price making this break below this level, right, on the 1 hour. So you can look to be able to take price to the downside. So price give you that nice thin correction. So price, where does price correct now? Price is busy correcting on the 15 and 5 minute. But as you can see, also on the 15, we had price break this lower low, right? So the only high that matters on the 15 would be this one, right? So you don't want to see price break above these. You know what I'm saying? So that's where the indication kind of came to the downside. Also on the 15, we have a indication below a price has shown that it just came broke below that area, right? So those are some of the things that you look at, right? So like, okay, price correlation, what does my 15 and that's where you find the trends. You have been having a bearish trend on the 15 also. As you can see, price from these levels came, giving indication, came back to correct and then shot to the downside, as you can see, right? So we had price break below these levels also to the downside where price started to go correct, and then that's what I'm saying, that's the only lower high that matters. So you have that happening on both. The correction is both happening on the 1 hour and the 15 minute. That's where the correction is happening, right? Now you can move to the likes of 5 minutes. Like, okay, as you can see, the 5 minutes is the one that's been, made a shift in market structure, but is currently correcting price, right? The 5 minute in this case is this now bullish. The 5 minute broke above these lower highs. Yeah, this type of consolidation that was happening. But this consolidation was an indication on the 15, on both the 15 and the one. So seems like on the 5 minute we can take actually these levels for the correction, because price didn't come all the way. Oh yeah, price all did go, but it broke up. But yeah, let's stick to the 15 one, right? So now, obviously, on the 1 minute, you can wait for a shift in market structure also on the 1 minute, right? So anything would correlate with 1 hour 15, and then you can get the 1 minute and the 5 minute also on the same side. Anything below here, as you can see, price wise it's going to the upside. Price made a high, 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 low, high, 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 low, and then went up to go to give you a high, high, right? So One of the things that can stand out, obviously, you can see price was also building some sort of structure, but it was making higher lows, so it was going to the upside. So you would want to see price probably break either one of these lower highs. So preferably this one, have a nice clean break to the downside, price coming back to correct that level, and then you can look to take it with a lower low and a lower high to this downside, you know, and then have your 1:1, 1:2, 1:3 being taken out. If you're gonna leave it right after that, that's all up to you. But whenever you in a 1:1 or 1:2, especially 1:3, actually, when price you already up 1:2, secure 1:1. Whether trade end up going furthermore, still fine. Or comes and triggers your trail stop and then continues making the structure. I mean, it's still fine. You didn't know price would do that. So those are just some of the things that you can be able to look at.